Alright, hello and welcome to Camel Finance. I'm your boy Camel, and no charts from me today particularly, as we did all that yesterday and the markets were closed for Labor Day. However, I've got a bunch of interesting news I want to go through, so without further ado, first of all, check this out. This guy right here is paying with a Bitcoin ring. So I'm in two minds about this. On the one hand, that's kind of cool. On the other hand, is this just one step before a microchip? I don't really know. At least with a ring, you can take it off and leave it somewhere. But either way, that is indeed a development in the Bitcoin space. We also have fintech bank Revolut, which has 15 million users, have just integrated Bitcoin SegWit addresses and on-chain withdrawal and receive features. So again, we love to see this. Over in El Salvador, as of next year, they're going to implement Bitcoin education into every single public school. So El Salvador really leading the way here. We also have peak Bitcoin distribution seemingly being left behind us. So we can see a slight uptick in accumulation, and this is the most aggressive accumulation since June, July for whales holding over 10k Bitcoin. So you can see at the top here, the whales with the 10k plus Bitcoin addresses are in reasonably heavy accumulation as it currently stands. The Bitcoin daily chart continues to build more bullish divergence, which of course is indicative that this move to the downside in the price of Bitcoin is becoming exhausted. It tells us to keep an open mind about seeing a reversal in the not too distant future. And as I was saying in yesterday's video, I am obligated to remain bullish all the while we are above the range breakout around 25k. I said it was simply malpractice to be bearish until we start to close daily candles below that area. As it currently stands, we have left behind a bottom, flipped it into support from resistance, and are now looking for higher prices. And you can see right here in this schematic above, this is a textbook range breakout, leaving a bottom behind before a move to the upside. So again, until we close back below 25k, it is malpractice to be bearish bias. There's still an awful lot of Bitcoin ETF news out there, isn't there? And a lot of speculation. And the question for me is, which way is it going to go? So I've shown this before, I'm sure of that. Here is the first gold ETF launched in the USA. And you could see from that moment on, gold went on to do massive things. So the question is this what's coming for Bitcoin? Are we about to see a launch of Bitcoin spot ETFs all come in at roughly the same time, only for the massive amounts of inflows to drive Bitcoin's price higher, similar to what we saw with the first launch of gold's ETF? Or are we going to get this other theory of mine? Are we going to get the price move up first and then the ETF launch at the top and used as a distribution and price control mechanism? That's to be determined. But notice in both cases, we do see higher Bitcoin prices, whether that is after the ETF or before the ETF. I still continue to believe that Bitcoin's 4-year cycles are just coincidences and have very little to do with the halvings. So global M2 money supply has actually been on its own 4-year cycle, and I know I've shown this before, and I know I keep ringing the same alarm bell on this, but I do not believe it's these halvings that are the driving factor for bull markets. As I've said over and over again, when we look at the money supply having its own 4-year cycle, those cycles have always been reflected in risk assets. When they print money, when they increase the supply, that money has to find its way into something, and it always finds its way into risk assets, such as big tech and, of course, Bitcoin. So you can see here, as global M2 ticks up, so does the price of Bitcoin. As global M2 ticks up again, so does the price of Bitcoin. And that is also what's been happening of late. We are seeing this uptick in global M2 as Bitcoin finds its low and enters a new bull market. The current yield curve inversion is at the same level as 1928. Let that sink in. Well, again, I'm afraid I have to sit here and beat the same old drum. This does not mean anything. All this means is that currently the yield curve is inverted, but this can continue for many months. And remember, it's not until we get the reversion and a cross back above the zero line that we usually trigger a recession. So just because we are this inverted, just because this is the same level as 29 back here, does not mean a recession is imminent. We first need to see that reversion back to the zero line and a cross back above. And of course, let's not cherry pick the data. Same level as 28 back here, but look how much worse this was. And this, right? So it doesn't necessarily mean just because we're back here, we have to enter the Great Depression imminently. And I'm now going to build upon this with this nice article here on the NASDAQ 100. The NASDAQ triggered a rare long-term buy signal indicating a potential buy opportunity for long-term triple Q investors. The signal is also favorable for the technology sector, with XLK and the SPY expected to benefit. Historical data shows that previous buy signals were followed by significant gains for the NASDAQ 100. So is there a roaring bull market ahead of us? So the first rare buy signal we have is this cop-up momentum, drop below zero and then turn back up above the zero line. You can see we had this back in 1988, and of course from there very good things happened to the price of the stock market walking forward. You can see from A to B a gain of 2,544% was made. A to B. We had another one of these signals flash in 1990. As you can see, we dropped below the zero for the cop-up momentum and we recovered it in May of 1991. You can see from 1991, point A to point B, we went on and put in a whopping 1,671% for the NASDAQ. We had this same momentum indicator drop below the zero line in 2000 during the bear market, and it did not recover it for some time. However, roughly 3 and a bit years later, we did recover the zero line, and the question becomes what happened to the stock market from there on out? As you can see, point A to point B, 61% gain. We had the same loss of the zero line in 2007, only to go on and recover it sometime towards the end of 2009. And again, we saw a 369% gain from point A to point B. So given we have flashed one of these today, does it tell us to keep an open mind about seeing much higher NASDAQ and S&P 500 prices going forward? I would make the argument that yes, it does. When we couple that with a liquidity cycle that has apparently, according to this at least, flipped for now. Now, this doesn't mean, it doesn't preclude that we couldn't go back into negative territory, but when you look historically, when we flip from negative to positive, we stay positive for some time, right? So assuming we can just continue to stay positive, we will see this money find its way into the NASDAQ, which aligns with those technicals that I've been showing you. It also aligns with Bitcoin moving much higher as this freshly printed money continues to do what it always does, which is find its way into risk assets. I'm your boy Camel. I hope you enjoyed today. Until next time, take care from me. All the best. Cheers. Bye.